Let's welcome in our first guest on the show. Abhishek Basumallick is now with us. Abhishek, thanks so much for taking out time for us. What do you make of the market? And once we had the RBI policy last week, why have we seen a decent rally?
I think, first of all, Pankaj, thanks for having me on your show. Uh, I think market wasn't really expecting a pause in rate hike, so that's something which came in as a positive surprise. Just sort of shows that RBI does not think that we are in any sort of trouble. So it sort of gives a very good backdrop for the markets to consolidate and maybe try to go up higher from here. So I think that's what the undertone has been from Friday and today.
Right. In terms of what's happening, with some of the rate sensitives, are you thinking like, real estate is up 4%, banks and NBFCs did well on Thursday. You think markets are trying to price in that for near term, at least sharp hikes are behind?
I think so. I mean, it was, or it rather still is, only a matter of another maybe 25 bips, which can go up. But probably we are in a place where rate hikes are behind us, and the fall in the markets really started a year and a half back when the rates started going up. And now that we are more or less in a place where rates have either sort of topped out or is in the future in the next 6 months to a year, probably maybe even starting to go down. Uh, you know, the focus is going to be back on those kinds of sectors which are rate sensitives.
How would you play this rate sensitive? Say if we had to assume that, rates are topping out over here and eventually, as we go ahead, rates would come down. So how would you play that cycle if that was the assumption?
See, I think one is obviously the banking, the MFI. This space looks definitely interesting, especially going with the fact that Indian banks have cleaned up their books over the last 4 to 5 years. So that's a very good place to be. Real estate again is a good place to be, but in real estate, I would rather play the higher end of the real estate market. So maybe a little bit of the luxury homes kinds of place. So because that is where there is significant amount of demand. So other than that, I think there's not too much to be done with rate sensitives. We have to look at all the other. In fact, everything that you look at is slowly looking positive for India. Rates stabilizing, oil not in a very alarming situation. Our exports in terms of IT, etc., is stable. So things are looking good for the next 6 months to a year, in my opinion.
Right. In terms of banks, how would you essentially look at the banking space where numbers are coming in strong, credit growth is coming in strong, but because maybe of the market correction or the rally that you saw going till the budget for the banking names, there is a correction now. Would you start nibbling into banking names because of the high growth that they are showing?
Yeah, definitely. I think, see, banking is a sector which has done well in terms of the fundamentals. They've cleaned up their books. The ROEs are much better today than they were, say, 2 3 years back. Uh, Credit growth has picked up significantly. We are seeing the underlying sectors, in terms of both consumption starting to pick up. Uh, uh, Industry also starting to pick up because there's significant amount of spending that is happening from the government side. Uh, so overall, I think banking is in a good space. MFI again, something which is picking up. So overall, I think banking, NBFC, MFIs, these are good places to be in.
Right. How would you look at the capex side of the market? When we talk about capex, there is power which has seen positive news. There is roads which are seeing a lot of traffic growth. There are various other cap good companies which are making new highs. So how would you essentially play the power space?
See, I think one thing that if you look at the data over the last, say, 20 years, the year before an election year, central election year, is the year where we have maximum government capex which comes in. And with that as a backdrop, we will, and what we've heard from the finance minister in the budget, what we are going to see is a significant amount of capital inflows into sectors which like railways, highways, airports, and all of this, and this will have a trickle down effect into capital goods, engineering, infrastructure plays. So that is a very including power, right? Power is another theme where we are moving from conventional coal-based thermal power to renewables. So again, means for the next few years there's going to be capital outlay which is going to happen. So uh, uh, these are good places to be in for the next upcycle in the market, in my opinion.
Right. In terms of cap goods, how would you rate the PE? Because a lot of players are saying, some of the stocks are available at very high PE. Would you say the markets is not discounting the earnings factor, or would you say they are really expensive? So, you would also wait, and any correction is something to buy them or look them forward to.
See, it is definitely that some of these larger players in the cap good sector, engineering, are available. They're not cheap. In fact, some of them in terms of PE are actually quite good. What is important to understand is that they are at the cusp of, or they've already shown extremely high growth in the last couple of quarters. Growth is likely to pick up even more from here. So with that as a backdrop, you'll find that next 2 quarters, 3 quarters, some of this speed is going to contract. So I would say that don't just go and look at PE. Look at the segment that each company is operating in. What is the prospect of that? Is there possibility of very high growth in those areas? And then you need to take a pick. But in general, this is a place which is very well poised for the next 2 to 3 years.
Right. In terms of a beaten down name, if one would say, there is Pharma, and there seems to be some life in a lot of Pharma stocks of late. You think it's in a complete neglected territory? Is that something which you would look for a pure value buy?
Absolutely. In fact, I'm very positive on pharma, especially some of the select names, because what has happened over the last 1 year is that pharma has been completely sort of beaten down because the COVID high of some of the names, in terms of pharma or APIs, it's been beaten down. So next 1 or 2 quarters may slightly be weakish, but within pharma there are definitely at least 3 4 companies where fundamentals have shaped up quite well, and earnings growth is expected to be pretty strong over the next 2 to 3 years. So uh, if you are selective in pharma, I think this is a brilliant time to get into it, and you will get better than market returns, if I may say so, over the next 2 to 3 years.
Right. When we just talk about the pharma pack, how would you look at it? Would you consider hospitals and diagnostics also into the same, or we are talking about pure pharma when you say you're bullish on
I'm
pharma?
Yeah, so I'm talking about pure pharma. I'm talking about API companies, CDMO, so that space. Hospitals, I'm not very sure, because see, the problem with hospitals, etc., is that it's a very capex heavy business, right? And always there is a overhang of government intervention coming in, because it's so close to uh, the people. So there's always a possibility of policy driven action, in terms of uh, lowering rates, or putting a ceiling on rates, etc. So that's something that I'm always a little bit wary about. So I'm not very keen on hospitals, but I think the overall uh, pure pharma, uh, pure the API CDMO space looks actually very interesting.
Right. Just a word as far as generics is concerned. A lot of people are concerned about generic pricing, generic launches, what's happening in the space. You think it's a cycle and we are at the bottom of the cycle? We may not turn immediately, but whenever we turn, once again you will get shortage and pricing would tend to go up. Is that the cycle that you're betting on?
Pretty much. I mean, I think, see, what happens in these kinds of things is people build up capacity and build up inventory during good times, and then you have a time when it's all sort of slows down. I think right now we are at that phase where uh, things have slowed down, and whether we've come to the bottom or not is anybody's guess. But I would, hazard a guess that we are probably closer to the bottom, or we've already made a bottom, and then it might not play out over the next 1 2 months, or 3 months, but definitely it is headed upwards in terms of a business cycle, is what I would think.
Right, sir. Thank you so much, sir, for taking our time for us. Always good to get perspective.